This is a company that has just lit the fire on Wall Street for a long, long time. And that's often the case, the kind of situation where if there's a nit to pick in that earnings report, it's going to get picked.
You've lit the fire under investors for a long time, too, Tyler. It's great to have you here. No, you're spot on. You know, it's interesting. The magnitude of the revenue guides higher have they've been slowing down, right? They've been getting less and less robust. It's not an indictment. It's just a fact. I mean, a couple quarters ago, they went from $7.8 billion to $11 billion. Obviously, a huge guide. That was last spring, and you saw the subsequent move. The guides are impressive, but not, I don't think, impressive enough. To your point, that what everybody's going to be focused on, I don't think necessarily the quarter, but the guide. And the lead times, apparently, I read over the weekend, are now greatly enhanced. In other words, what was 8 or 9 months are now down to 3 or 4 months. That either means they're getting their act together, or maybe demand isn't as robust as everybody seems. We're going to find out tomorrow. But to your earlier point, that was the first crack in the armor for sure.
Yeah, and I guess the problem, Tyler, is that, you know, street estimates for 2024, the year that we're in right now, okay, so this company's reporting their Q4, their fiscal, are expected to be up 70% on earnings and 70% on sales. So the estimates are already really high, right?
It would be high.
Yeah, so to Guy's point about these decelerating beats, right, so you have the situation where the buy is it's just so high, right? And so if there's any slippage, and, you know, every morning I wake up to a new story and Guy's talking about maybe there's a demand issue. We've only heard about tight supply. We keep hearing about their biggest customers. We talked about the customer concentration. It's Microsoft, it's Google, it's Amazon, and it's Meta make up more than 40% of NVIDIA's sales,
right? Yeah.
So, and every morning I wake up to a new story how Microsoft is trying to diversify away from their dependence on NVIDIA. Sooner or later, that will take a bite. And then if there is a demand issue, that's when you actually have a guide lower, not a guide below what estimates are. And so to me, I just think that, listen, I think it sets up as not a great risk reward. I think it would be better if the stock was just raging into the print. You know, it sold off a little bit. I mean, some of the steam coming out of the trade over the last couple days is probably a decent thing. But if you want a meaningful pullback, then you're basically not going to want to go into the print a little bit depressed.
So the SMH, go back, if we can do a longer term chart, you'll see that 160-ish was a huge double top made last July, and it sold off from there. Since then, off to the races. So past resistance becomes support. I think we closed at 195. NVIDIA, to Stuart's point, is 25% of that ETF. Think about that. You had Taiwan Semi, Broadcom, and AMD. That's 50% of the ETF is basically 4 stocks. So is there a chance? I don't think, listen, you're looking for a place to get into these names. God forbid something bad were to happen. And the level in the SMH is around 160. You can do the math on the individual stocks.
Yeah, and I think, listen, if there was a disappointing guide, you would have all of their customers get hit too, right? So the guys who are buying these chips from them or have been buying them and causing these huge upsides. So, like, there will be knock-on effects. Obviously, the semis will be the first. Semi-equipment will be the next. And then they're going to start looking at the hyperscalers, all these companies that have been buying all these things. And I'll just make one other point, because you were talking about, like, broadening out. You know, the other mega trend over the last year has been these GLP-1s. And we've seen that, you know, Eli Lilly and Novo Nordisk, they've gained, you know, hundreds and hundreds of billions of dollars in market cap. And there's similar, very concentrated trades, right? And there's a couple winners that have taken a lot of the, you know, the goods in this whole trade. And so I would be worried that if you were to see the semis, you know, fall over the next few weeks or so, you're going to see some of these other very crowded trades that a lot of folks have just kind of anointed.
That's a really interesting point. That they're
I do that every so often.
Every
Tyler.
so often you come up with a good one. But that's really interesting, because they are sort of similar in the market power that they've delivered, in the gains they've delivered, and in the concentration of the.
Yeah, I mean, listen, there haven't been too many other great stories in the stock market over the last, call it, 14 months or so. And obviously AI and you know, a lot of the related stories, and then these GLP-1s. But, you know, aside from that, I know we're going to talk about it in a little bit. I mean, look at how some of these stocks that literally disappointed pretty dramatically just 3 or 4 months ago. This was Walmart was one of them, had a huge gap. And look at this stock gapping to new all-time highs today on the sort of announcement that most of us, looking back on our careers, wouldn't expect to see a 5 or 6% gap of a stock this sort of size on an announcement like that, a Walmart like that. Yeah. So my point is, we've seen a lot of euphoric behavior in a very short period of time, really since late October.